Hello everyone, Ken here with the Angst real estate team with Hope Properties. Hope everyone's doing well. Sorry about my hair. I was out in the field today climbing around in crawl spaces, so here's. So we're doing another rapid fire. We're continuing our series on the offer and acceptance contract and going through and answering questions about the residential offer and acceptance for the Reno Sparks area. So we're fortunate enough to bring in one of our preferred lenders, Elena, Boland. How's it going?
Good.
She was Wholesale Mortgage. Why don't you give your number?
775-825-1600.
So we're going to go rapid fire on a piece of paper. It's one of the areas on the first page of the contract, line items 20 through about 40. And we get a ton of questions about it,
Right.
just because it's something that not a lot of people cover, and we see a lot of contracts where it's left blank.
Yes.
So we want to make sure that we are covering our clients and making sure that we're doing the best for them and making sure they're covered in these contracts. So
Right.
you ready to go?
Yes, I'm ready.
So I'm going to actually read from it. So on line 20, it talks about the new first loan, and there's different types. There's conventional, FHA, VA, and private.
Right.
Can you kind of discuss quickly what those variations are, like what the percentage is down and what those look like?
Sure. The first two most common government loans that we see in our market right now are VA and FHA loans. VA loans, of course, are offered for veterans, current military and former military.
Okay.
Those do not require any down payment. And FHA loans, also a government loan, 3.5% down payment, really popular for first-time home buyers. It helps just with the little higher debt-to-income ratio calculations, and again, that lower down payment. USDA rural loan is only available for certain rural areas around our area, like if you go out to Fernley, Fallon, if you hit the lower Carson City, Gardnerville areas.
So how do they find that out? Is that something they call you about and ask you what programs are in there for rural?
Yeah, certainly. Okay. There's a link that I send everybody because unfortunately it's a government program, which means that their website isn't the most user-friendly, and you have to type in a particular address to make sure that the property is eligible. In that case, I definitely kind of steer everybody towards me to let me help them, guide them through navigation on the website, just to make sure everything's copacetic there.
Great. And then private means a lender, like someone's parents maybe, or what is an example of that?
Yeah, there's a lot of private money varieties out there. It literally just means a person lent you the money and then they put a lien on your home just like a bank would, and then they expect a repayment just like a conventional mortgage would, but you have to disclose those things to the seller. That's why it's so important to keep these things on the contract so that everybody's aware of what's what in the contract.
Great. All right, so then the next line is there's a box that says fixed rate for blank years, interest to not to exceed. So obviously there's 30 years, 20, is it 25 years, or how does it?
Yeah, we actually have every single year available. You can do a 30, 25, 24, 19, 18, 17.
I didn't even know that.
Yes.
You learn something every day.
That is new, so you're not wildly out of the loop.
Okay, so you have to disclose how many years
Yes.
it's fixed for, and then interest not to exceed is very important. Now, what is that?
So whatever the current market rate is going for at that point
Let's
in
say
time.
today. Let's play with today's rate.
Today is 3% flat.
Okay. So if you were going into a mortgage today, and you not to exceed, what number do you recommend people put in there?
I would recommend always adding 0.5% onto that current market rate because the market can fluctuate. It's just like the stock market. You can see it going up and down multiple times a day some days. So you want to protect yourself and the other side and just disclose to them what the interest rate is for your particular mortgage loan. Because if rates move too much overnight, which can happen in any market, you want to make sure that you as a buyer have a way to back out if the rate exceeds a number that you're comfortable at, and that could affect how high of a loan you qualify for. It's very important.
So what do you recommend? 0.25% higher? So if we're at 3%, 3.25%, 3.5%?
I recommend 0.5%. So today I would recommend 3.5%.
And if it goes above that, to be clear, our people before they lock could potentially get out of the deal.
They could, absolutely.
Okay, so that's one of the ways out.
Yes, and that's a good coverage for your buyers and a very important detail to cover because a lot of times, unfortunately, these things are not gone over. So being that you're a great agent, it's so great to see you making sure that your buyers are covered in that way.
So because on my first house in 2008, in the 3-month span, my interest rate went from like 4.75 to 6.75.
Yes.
And I had to eat it.
Yeah.
Because it was a new home build, so there's no way, it wasn't locked in.
Right, exactly.
So 2% is a big deal,
Yes.
especially when you're getting into 5-6%.
Yes.
So,
And I love that you brought that up, Ken, because we know new construction is a popular choice right now, but that is a big risk for that exact reason, because sometimes you don't know when they're going to finish your construction.
that's correct, because lumber's tough to get.
Right.
And so you can definitely end up with a higher interest rate.
Yes, something to be aware of.
Okay, so then we're going to talk about adjustable rates. So what is adjustable rate? I know that these used to be, when interest rates were normalized at 6 or 7, they used to be a thing, and it got a lot of people in trouble in 2007, 8, 9. What is an adjustable rate mortgage?
Adjustable rate means that the rate can move during the term that you are making the payments on your house. So there are a couple of varieties. Some are fixed for 5 years, and then the remaining 25 years following in your mortgage can have rates that adjust every single month or every single year. Some also follow the LIBOR, which just changes at the whim of the government, essentially. This, just like you said, is what got a lot of people into trouble because their rate literally doubled. And sometimes when you assume that your rate being fixed for the first 5 years covers you, because that may be your plan to keep the property 5 years or less, things change. And if you're in an adjustable rate mortgage, that is quite a risk. Thankfully, right now, they're not a big necessity in this market because there is no rate break for an adjustable rate mortgage. So there's no carrot being dangled out by lenders, which was a part of the issue in our former market. Thankfully, not there.
So we saw several people, or a multitude of people, not just several, a lot of people in 2007, 8. So in 5 or 6 to afford it, interest rates are at 6. They got a 5-year at 3.25.
Right.
Then it came due, and it would go up almost. Their payment would double.
Yes.
And that's why we saw a lot of foreclosures, because at that point they couldn't afford it.
Absolutely.
So, not used a lot in this market, but maybe in the future when interest rates go up. Talk about, there's a second line on there, 25 through 29, and that is second loans.
Right.
What is a second loan for? I mean, what are we looking at? Why would one of our clients want to use that?
Well, here in Nevada, we have a jumbo loan limit threshold that keeps you in the conforming loan limit of $548,250, so $548,000 essentially. If you go over that, you're considered what's called a jumbo loan. Jumbo loans are definitely available for buyers, but they have very tough credit restrictions, and the interest rates are higher than the conforming market. Conforming meaning under that 548 bucket.
Okay.
So in order to avoid getting a jumbo loan, we have options of a first mortgage of 548 and a second mortgage for anything that may go over that.
So let's use an example. Someone's at, I'm just going to use 648.
Sure.
So the math's going to use. So someone comes in and says, I want to buy a house 648. What does that look like for a second there?
They can get a $548,000 first mortgage, and they can get a $50,000 second mortgage.
50 or 100?
They cannot get 100, right?
They got to bring in money.
Yes,
So,
because you cannot get a loan for 100% of the purchase. You do still have to put a down payment in place.
For both loans.
Right.
Okay.
Yeah, exactly. So the second mortgage just helps cover that spread of the conforming 548 loan up to your down payment money without going up to 100%, of course.
Okay. So second loans, we see them. And is there any other situation that we're doing them right now?
They're not necessarily for purchases. Some people will go out after we close escrow and get HELOCs for home improvements, things like that. That is also a second mortgage. But
not in the contract.
Right, exactly.
Okay. And everything works the same for adjustable rates. You put or second mortgages, you put
all your
not
terms.
to exceed and all the terms in there, just like we talked about. So,
right.
Now, Elena pointed out to me that there's a line on here. It says, buyer to lock loan terms within blank days of acceptance, or buyer agrees to pay prevailing rates. She does it a little differently, and we kind of were chatting before.
Yeah.
Tell us about that and what you guys do here at Wholesale Mortgage.
So I have a different philosophy. A lot of buyers or lenders, have their own different way that they do things where they lock in right away. I always let my buyer choose what they'd like, but I give the advice in a way to just help, with things that I've seen essentially. So I have seen people lock in their terms right away for 30 days and their contract is up in 30 days. And something comes up on the inspection, however, they'd still like to purchase the home. For example, if in an inspection, the roof comes back bad, but you're only locked in for 30 days, and the roofers cannot finish the job until day 48, what happens? Your rate's locked in.
Yep.
You have to pay what's called a lock extension fee.
Wow. What is that? So it's good for 30 days. You lock it for 30 days, and if you don't close, what happens? What are the ramifications for the?
You can let your lock expire. In that situation, you no longer have the benefit of the rate that you have locked in. So if the rate expires, you get worst case for the market.
Okay.
That can be, 0.5%, which is quite a difference in your house payment. It can be $100, $150, and that's something that you definitely have to take in consideration. Or it can be a big amount of fees, and the average lock extension fee is 1/8 of a point per 5 days.
Wow.
So you're talking $500 ish, depending on the loan amount, per 5 days that you have to pay in fee, and we're talking money right out of your pocket.
Right.
So
just to get the more than you already bringing in.
Right. So I do recommend for most buyers to wait until all of their property inspections and appraisals are done to ensure that there's nothing that's going to cost them extra money.
That's great advice. Because some lenders have us putting in, everyone has their different philosophy,
Right.
and it might make sense sometimes to lock it in early.
Sure.
But give yourself 28 days or whatever it is, so you can lock it earlier, right?
You can. That's just your time limit. You have to lock it within that time frame.
Okay.
And I do keep a strong pulse on the market. So if I have somebody out there that is awaiting for their inspections to come back, then I just watch it closely for them every day, multiple times a day, and we always inform them of any upcoming market changes.
Okay, one last paragraph, and this is not the most interesting, but important nonetheless.
Yeah.
So this talks about buyer to pay discount points not to exceed. What does that mean?
A discount point is a deceiving word to me, because what it means is that you are paying more money to receive a discounted interest rate.
Okay.
So it sounds a little backwards whenever you read it. And a point means a percent. So if a loan amount is $300,000, a point is 1%, which equals $3,000. All buyers have the option to buy down their interest rate. And that is what a discount point addresses. It's the ability to buy down and pay more money to get a lower interest rate.
Now, do you typically recommend that?
I always ask the buyer what their plan is for the property. So
Okay.
There's a statistic called the 5-year itch, where people typically refinance, sell, etc. within 5 years. They, life changes come up. They need to refinance to go into a 15-year loan because they want to plan for retirement. They're going to refinance, pull cash out because they've got to pay off some debt, etc. So if the cost is not recouped faster than that 5-year time frame, I usually do not recommend buying down.
That's an excellent point. And the average person moves every 7 to 8 years. That's what was out. So keep in mind that I've heard 1,000 times this is our forever home, and here we are with several of our clients right now. We're working with $400,000 or $500,000 in equity, and they want to move up.
Yes, very
and
tempting.
they have kids, dogs, and RV now.
Yes.
So keep that in mind. Is that a lot of things change. So before you go in there and pay all those discount points, make sure it makes sense.
Yes.
Seller to pay discount points not to exceed. Is that happening in our market?
No, unfortunately, right now, sellers are not typically offering
anything. Want you to pay
in the way of fees and money towards a buyer's loan, because ultimately it's the buyer's responsibility to pay fees associated with their loan. In former markets where it was more of a buyer's market, they could go to sellers and ask them to pay specific things like a discount fee for them. In this market, that is not applicable.
So I know for a fact when we were buying some of our rentals in 2007-8, lenders were paying for our closing costs, believe it or not.
Yes.
Because they were trying to give away those. So that's where that would be put. What is a loan origination fee not to exceed and it paid by buyer or seller? What is that?
Origination fee is a fee charged at times by some lenders. It's never an across-the-board answer because all lenders operate differently. That's why it's important to shop. Some lenders typically charge a 1% origination fee. Again, meaning if your loan amount is $300,000, it's a $3,000 fee.
And that's just for the pleasure of getting them to hold your mortgage.
Right, exactly.
Up front.
Yeah, so the origination fee and the discount points are very different things. The origination fee is a fee paid directly to your lender's pocket. Discount fee is used to buy down your interest rate.
Great. Okay, so keep that in mind out there. That's what's going on there. Now, another thing that pops up when we're doing FHA and VA, and it just happened to me on one of my listings, there are non-allowables, correct?
Correct.
So this is on the sheet, and it says, seller agrees to pay blank in loan fees that buyer cannot pay pursuant FHA and VA regulations. What does that mumbo jumbo mean?
I'm a big veteran advocate, so I made sure to educate myself properly, and I'm always out there soaking up information because the VA regulations do change frequently.
They do.
Currently, if a lender charges a 1% origination fee, you are not allowed to, as a buyer, pay for half the escrow fee. You're not allowed to, as a buyer, pay for the pest inspection, and there's many other fees. If your lender does not charge a 1% origination fee, then you as the buyer can pay that. And there's a big bout of misinformation in our current and national market, frankly.
This is good. We get it all the time.
Yes.
This is good.
So another thing to be aware of is how small are these costs? So I just have to say it while you got me. I'm hoping some sellers hear that VA loans are the best loans out there. If a buyer has the ability to, without penalty, pay 100% of the appraised value, plus they have some money in their pocket, they have more buying power than any other buyer out there.
Right.
Additionally, most of them can afford to pay their own costs without paying a 1% origination fee. As a lender, I always cover my veterans non-allowable so that it does not affect the strength of a VA buyer's offer on a home.
Because there are people who are misinformed.
Yes.
And I'm not going to go much more into that.
Right.
But and some sellers get VAs and they haven't been educated on what they are, and they won't take that one, and they'll take some of that, and that's not necessarily a good idea.
Yes, exactly.
Okay.
It's just something to consider. Know that those things exist, of course, but talk about them and go through the offers in the best thorough way that you can to really figure out what's going on in these numbers, and use this as your tool.
That's great, because we see a lot of our contracts come in with the pest being paid by the seller, and that's not necessary. Now, how would you know? Is it because up here you would know because what they put down here for origination fee?
Right.
You see that?
Exactly.
So,
they should disclose that they're going to charge 1% origination fee.
And then that's when they can't pay.
Exactly.
And where do we get that list from? You? Allowables?
Yeah.
Or non-allowables?
You can. Escrow companies actually also have the list because they unfortunately end up with the brunt of the work because they have to go through and itemize the veterans non-allowables. But definitely all lenders can disclose to you and give you the great itemized list of all the VA non-allowables applicable when a 1% origination charge is being.
This is excellent.
listed.
So yeah, this is a very confusing section on the contract.
Yes.
Awesome job as usual.
Thank
We're going to come back because we want to talk about appraisals, but we don't want to bore you too much more with that. We'll come back maybe in a week or two and talk about that. So
All right, sounds good.
give me your number again and your location and how they get a hold of you.
Sure. I definitely recommend our website. It's wmsreno.com. Great website. If you want just some light information on there, go check out our website. Call 825-1600.
All right, and she has very competitive rates, and all of our preferred lenders do. So
Yeah, that's
appreciate you coming in.
Hey, thank you.
Take it easy. You guys, we'll be back. Actually, I have some more live podcasts next week. If you have some ideas or want to be on our podcast, you know how to get a hold of me. 775-525-0309. Take care.
Great. Thanks, Ken.